Good morning, everybody, and this is your DAX day trade setups for today. So a couple of things are going on here, and I think it's pretty important just to understand the bigger picture here. So there is a trend line. We've got two fractals now, so that is that, and here is the next trend line. Remember, the first two swing lows here is what you want to lock. Just want to lock those two levels in. So that is a triangle, a relatively weak triangle with only two touches on either side. This could be the third touch here. At a triangle inside of, I'm going to do that and take your pick where that is, inside of a range. Okay, now if you look back here, you haven't quite had that structure. You had a bit of a channel form, you had another flag form there, and now you have a triangle forming inside a range. We've got a crossover of the oscillators. We're right back in amongst all the moving averages here, so we could just break below, come and test the low again, and then come up. The significance here is quite interesting because you do have a lower high in place. Okay, so you've got a lower high in place. Not that it means much if you look at the left of everything we've been going through since April. And we're back in this zone here, in the zone of chaos, basically where all the sellers have come in. So either, the significance of this is one of two things. So typically when you get a triangle like this in a range, you get a break to the upside. That's the one side of it. And then the other side of it is, you could break through this level of resistance and then get back into this kind of price action where you just keep bumping your head off there and buyers coming. So just tightening up of the range. So that's one of the two things that will possibly happen. We'd have to break through the bottom here at 15,700 area, but it is so messy down here. I'd want to see a proper break before a retest, before even jumping in there. So yeah, so that's kind of what's happening, and this was all done on the DAX's own steam. So USA didn't impact this at all, which is another very interesting fact. Okay, so let's just get to the smaller time frames or the lower time frames. And the first thing you'll see on the 3 hour is there is diversion. So low, lower low, low, higher low, testing the trend line. So that is something you do need to pay attention to in amongst the moving averages. So kind of ranging. Also testing the neckline of this head and shoulders. Not yet, but here's your inverse head and shoulders. Here's your shoulder, double head, right shoulder. We had a clear break, we've come back to test it. So this level here is very important, and that is 1600. 1600 it has been the important level for so long this year, since April basically, and it is going to come into play. So either we're going to find support here, or we're going to crack below it and then come and reject it, which would then trigger opportunities for shorts down to the bottom of the bigger range. But for now, with the diversions on the 3 hour, grouping of all the oscillators on the hour, we are pretty much in a downtrend, which was confirmed yesterday with this retest here. We have closed some of these gaps. There's a couple more down in this area here. And obviously this trend line is a little bit further down. So 1600 I think is probably going to be tested, and you'd be probably pretty wise to wait for the open, wait for price action on here, and if there is any bullish price action, just take it. Take the gamble of a move to the upside. It's a really strong area of support, and maybe even a small position, tight stop loss type scenario. But you're looking for a pin bar like this, but not short of the level. We are kind of just below that level. You're looking at the 1600 area. That to me would be the one. Let's get rid of this one. So this is kind of the zone you're looking for. 1600 And if you just head left, okay, so you got 1600 in, but then look to the left, get 3 levels in around the 1600. You can see the support that's here. And goodness, that would probably be the lay of the land. It could drop as far as this area here, but your stop area is going to be, I'll just see how big that is. Now that's quite a big stop. Oh, it's not 77 points. So the thing here is we've only moved 85 points, a 0.5%. So this to me is not a big sell-off. It's just a retracement. So this is going to be well worth the opportunity of jumping in here. So wait for the market open, have a look at 1600. First sign of a pin bar on the 15-minute inside bar engulfing bar. That's going to be your trigger. Jump in on the upper side of that. You can either put your stop below it. I would actually just rather go with the stop below 15,930. So in other words, leave yourself a 100-point stop loss. Yeah. So 100-point stop loss is more than adequate. And position size, depending on your risk profile, but I would just keep that well. Wouldn't risk more than like 0.5% of capital, to be honest, just in case it pops the other way. But it would have the ability to climb pretty quickly if it does move. Just bear in mind you've got non-farm payrolls on Friday and you've got the Fed minutes this afternoon, so it might just hover in this area for another day or so. Anyway, that's kind of my view for today. I hope it helps, and don't forget, drop us a thumbs up and comment, and we will catch up with you tomorrow morning. Cheers for now.